Welcome, Chris. How we doing?
Hey, what's up? How are we doing today, Spencer?
See a cat tail in the background there.
Always.
Always. A busy day for you, right?
Busy day. 4 new deals announced today, and it's not even Merger Monday.
No, it's what are we gonna call it today? It doesn't
Yeah, I
matter.
was trying to think
It
of a
doesn't
clever
matter.
name.
It,
I don't have one yet.
Forget it. Forget it. We got too much to get to. Let's get to the headlines and let's run this thing.
All right. So headlines today, guys, before we get to those deals and that exciting interview that Spencer mentioned. Up first, we have Clever Leaves. So this is ticker CLVR, a former SPAC. We had the CEO of the company on our show not too long ago. So they announced that herbal brands that they own entered a partnership to import their commercial CBD into the U.S. So again, as he mentioned on the show, looking at utilizing, that CBD brand to really grow across the U.S. is right now their cannabis segment is targeting federally legalized areas, which the U.S. has not reached yet. So look for that CBD story for Clever Leaves before we get to federal regulation here in the U.S. An NPA was a big mover yesterday. This is the 5G from space play that we've talked about on the show, a SPAC merging with AST. So Citron Research yesterday came out with a tweet, a $50 price target on NPA. Shares were up double digits. The quote from Citron is that all SPACs are speculative, so why not go with one with a $1 trillion total addressable market that has the potential to change the world with real partnerships? Called NPA the most compelling space story in the market. So I've hit on this one several times. We're a couple years away from revenue, but this is one where, huge market. They're going to use satellites to bring 5G, to users in emerging markets first, then the US and other areas. They have that deal with Vodafone, which is going to split revenue 50-50. They also have a partnership with AT&T and American Tower. So some strong partnerships there, as they look to expand, and definitely getting some love from Citron yesterday. Another one we hit on yesterday was INAQ, was a SPAC. Looks like that deal. So the deal has been approved. Could trade as MILE, as early as today. I do not see it trading as that yet, but that is expected to happen today. This is the pay-per-mile insurance company backed by Chamath Palihapitiya and also Mark Cuban. And then they have that new addition of Ryan Graves from Uber. This is one where I think it's going to get a lot of attention and really start to grow once it trades as that new company. And you hear more about it from Chamath and Mark Cuban and others attached. So definitely look out for that one. New ticker will be MILE. Another favorite on the show is Fisker, FSR, of course, former SPAC. I own shares of this company. They announced that they will report earnings on February 25th. Now, that new vehicle is expected to come out late this year or early next year. So this earnings report, of course, is not going to be about revenue. It's going to be about the future. So we're going to get a detailed look at what their reservation numbers are, key partnerships, maybe announcement of when we'll hear about those additional vehicles that Henrik Fisker keeps teasing, on Twitter. So keep an eye out for Fisker earnings because, again, it will be about the story, not the financials. Couple new SPAC filings last night, notable. So Colin Kaepernick, former NFL quarterback, is launching a SPAC, $250 million. So targeting the ESG sector, strong social values. No surprise there given his history. So Kaepernick has partnerships with, Nike, Walt Disney, Netflix, Beats by Dre. He's put together a strong team, too, as he leads this SPAC. So John Najafi, he's the partial owner of the Phoenix Suns. He also has done consumer deals with Kendall Jenner and Millie Bobby Brown. He's an entrepreneur and investor. He is the co-partner on this SPAC. And then also we have Ben Horowitz, who's the co-founder of Andreessen Horowitz. He's made investments in Airbnb, Clubhouse, Coinbase, Roblox, and Stripe. Strong investment knowledge there. And then Omer Johnson, the former chief marketing officer of Beats by Dre and vice president of marketing at Apple, is also attached to this SPAC. So they're looking for a company, $1 billion deal. Again, Kaepernick's going to get the headlines as we talk about these athlete and celebrity SPACs.
Wait, Chris, can I make the same joke that everybody else made on Twitter last night?
What is the joke?
That they have to call the SPACernick, and if they don't, I quit.
I think there is some missed opportunities with these SPAC names. I mean, as we talked about the Shaq SPAC, which we're going to get to in a minute, why was that called Forest Road? Why was it not called the Shaq SPAC? Why was it not ticker SHAQ? I mean, missed opportunity. So, sometimes it surprises me with these names.
Yeah. Anyway, these people need better marketers. Moving right along.
Yeah, so that Kaepernick SPAC does not have a ticker set for it yet, but we will let you know when we hear more on that. And then another fun SPAC that was announced last night was Post Holdings. So Post, as in the cereal and packaged food company, is launching their own SPAC. So this is notable because a lot of times we've seen private equity companies, venture capitalists, investors, launch SPACs. But here we have a public company launching a SPAC to target, a company outside of their existing business. So the thing I'll note, and here's the trade idea for this, just my opinion, Post Holdings is going to own part of this company, this SPAC. They're going to get free shares. So founder shares get issued to the sponsors and to those partners. So Post Holdings is going to launch this SPAC. People are going to invest in it, and Post Holdings will get free shares. So they're actually going to have some new profit that will hit their books within the next quarter or two. So that's something to watch with Post Holdings, and also to see how this SPAC is perceived by the market. If this is well loved, pre-deal, if they get a strong deal, you could see this become a trend where public companies launch their own SPACs. So rather than, acquire companies, normal business model as we've seen, maybe they launch SPACs and they go after it that way. Or maybe we've reached peak again and, this will be a failure from Post. So time will tell on that one. Then we have Romeo RMO battery company that we've talked about a lot on the show. So they announced a new battery recycling collaboration with Heritage, one of their partners. When we had Lionel Selwood on the show, the CEO of Romeo, he talked about that battery recycling, being a growth area for them. So that press release was out today, and definitely worth taking a look, because not only is batteries going to be a growing market for electric vehicles, but also the recycling of batteries to use those materials again and again. Then DraftKings, no surprise, DKNG. ARK Funds added more. An email showed that they added 442,500 shares to ARKW yesterday. This is the third or fourth purchase from ARK Funds. Again, DraftKings is the leader as far as being in the most states for online sports betting. And ARK sees a huge potential for sports betting going forward. So, big bet here from Cathie Wood and the ARK team in the possible leader in that sector. And some movers from yesterday. So we, of course, had 3 deals announced yesterday. This is how those tickers perform. So GHVI shares were up 24% yesterday. DCRB shares were down 10% yesterday. And PANA shares ended the day up 1%. So again, 3 deals yesterday, 1 up, 1 barely up, and 1 down 10%. So remember, guys, I caution again, chasing these deals when they're announced in the morning, and also chasing some of these SPACs trading at high premiums, as within the first day that premium can disappear in a hurry. That's why I like to stick to these deals these SPACs between 10 and 11, and also these SPACs with strong management teams that get that, big first day pop. So pay attention to some of those trends. Other big mover yesterday was JWS. A new filing shows that Fidelity has a 9.2 stake in that company. Definitely something worth watching, as Fidelity is, of course, one of the big names in the market. So pay attention to that one. And then turning to our deals. So 4 new deals today. Try to run through these as quick as I can. So CMLF announced a deal with SEMA4, which is a disruptive AI-driven genomic and clinical data platform company, patient-centered health intelligence. So they see revenue in 2021 of $265 million, up 39%. Fiscal 2022, $360 million revenue estimate, up 36%. So that deal valued the company at $2.1 billion. Next deal was FGNA. They announced a deal with Op Loans, which is a fintech platform powering credit access for the everyday customer. I own shares of FGNA. They see revenue of $418 million in fiscal 2021, up 30%, and $656 million in fiscal 2022, up 57%. This deal valued the company at $909 million. Our third deal, FRX, this is Forest Road Acquisition. So as I mentioned, this is the SPAC SPAC. They announced a deal with Beachbody and also MYX Fitness, a leader in digital fitness streaming. So they're actually acquiring both these companies. So, that's important. And we're going to break this one down tomorrow as I read through all these details. So deal being done at $2.9 billion valuation, includes a $225 million pipe. So fiscal 2021 revenue estimate of $1.1 billion, fiscal 2022 estimate of $1.5 billion. So again, Shaq's going to get the headlines here, but remember, 3 former Disney executives attached to this deal. One helped launch the Disney Plus streaming platform. 2 of them were involved with ESPN. So as we look at, Beachbody and that fitness brand, experience in the sports industry. And then also Kevin Meyer was the former head of TikTok. So how can he integrate Beachbody and MYX Fitness to grow their social media values? So I see strong things. So I, of course, own shares of FRX. Shaq has a strong marketing presence. He's widely known. He appears on TNT, as an NBA commentator. And then you have those 3 former Disney executives. So I think they're going to be able to grow both these brands, and bringing them together, I think, brings some synergies to the table. And as we've seen Peloton grow, as we saw Mir get bought out by Lululemon, that digital fitness, that at-home fitness, that nutrition, those are all growing markets. So I think this deal was a strong one. And I'll be doing more details on that one tomorrow. Just did not have the time this morning to dive into that entire presentation. The one that I do have more details on is our 4th deal, ACIC. So ACIC is acquiring Archer Aviation, a leading urban air mobility company. Deal is going to give Archer $1.1 billion in gross proceeds, including a $600 million pipe. So that pipe includes United Airline Holdings. The deal values Archer at $2.7 billion. Shares will trade as ACHR on the New York Stock Exchange post-merger. So current Atlas Crest shareholders will own 13% of the new company. So Archer is seeking that electric vertical takeoff and landing market. They want to be the leader in urban air mobility. So they can travel up to 60 miles at 150 miles per hour. Their current vehicle model can carry passengers then 10 times faster than a car. So the catalyst here is they actually expect to unveil their full-scale electric vertical takeoff and landing vehicle later this year in 2021. So definitely keep an eye on this one, as we could get another pop later this year on that unveiling. So Mark Lohr was the initial investor in Archer. He's a well-known entrepreneur. He sold Quidsi to Amazon for $500 million and Jet.com to Walmart for $3.3 billion. He recently stepped down after leading Walmart's U.S. e-commerce division. So as mentioned, United Airlines is an investor in Archer, but they also signed a huge partnership this morning. So they are investing $1 billion in purchase orders of Archer aircraft. That deal also includes the option to purchase an additional $500 million in Archer aircraft. So United said that one Archer vehicle can reduce CO2 by 50% per passenger on a flight from Hollywood to Los Angeles. So they're using it as, their zero emission play on the future, and also getting customers from place to place faster than current options. And the other partnership for Archer is Stellantis, signed in January. So Stellantis, ticker STLA, is that merger of Group PSA and Fiat Chrysler, which is now the fourth largest automotive manufacturer in the world. That partnership with Stellantis gives Archer a low-cost supply chain deal and advanced composite material capabilities as they look for vertical integration of that aircraft. Cities mentioned in the prospectus were Los Angeles, New York City, Dallas, Fort Worth, and Orlando. So they're going to focus on those highly densely populated areas first. Two business models, Archer Direct and Archer UAM. So Archer Direct will be the aerospace manufacturer, and then Archer UAM will be a rideshare business taking passengers 100 miles or less in densely populated cities. So think Uber for the sky. So the sample in the presentation shows an Archer vehicle going from San Francisco to San Jose. 17 minutes is the time. An Uber ride, 1 hour, 40 minutes. A trip from Manhattan to JFK Airport, 22 minutes. Uber, 70 minutes. So definitely cutting down on that travel, and they think they can do it cost effectively and with zero emissions. Mass manufacturing is going to be a key here. They will launch that new manufacturing facility in 2022. So from 2022 to 2026, they're going to produce 200 to 1,000 vehicles per year. That number rises to 5,000 vehicles from 2026 on. They also mentioned future revenue streams of cargo deliveries, military, emergency vehicles, global expansion, and charter flights. So huge growth opportunities. Morgan Stanley estimates the urban air mobility market worth $1.5 trillion to $3 trillion by the year 2040. Huge total addressable market here. They expect deliveries by 2024. They see positive cash flow by 2025. So those financial projections in the prospectus start from 2024 and go out to 2030. So for 2024, they see $42 million in revenue and 10 aircraft produced. 2025, $1 billion in revenue with 250 aircraft. And then all the way out to 2030, they estimate $12.3 billion in revenue with 2,300 aircraft operating. So that's it for those deals. And then, of course, our calendar. Tomorrow we have the vote for SBE with ChargePoint, which I own shares in SBE. And then on the 12th, Friday, we have Longview LGVW voting on that merger with Butterfly Network. So I know that was a lot, Spencer. That's it for headlines.
Yeah. Have I told
That's
you
it for those deals?
Before we move too far, have I told you my Stellantis conspiracy theory?
No, but I would love to hear it. And also the Stellantis, I read that name and I was like, who is Stellantis? Yeah. And I looked it up and I was like, oh, yes, the merger.
Right. So Stellantis' new ticker is STLA. That's not a coincidence.
Oh, I did hear you say this on pre-market.
This is my theory. They're going after the dyslexic crowd. It's not fair. They just want people who think they want Tesla to type it in wrong and get their company instead. And they're competitors.
Yeah, they're in the same market. That is very interesting.
I mean, come on. How else could they have come up with that? STLA, TSLA? Tell me I'm wrong. You can't, because I'm not.
I can't argue against that. So all right, so that's it for headlines and those deals.
Sorry, I took myself off there. I was talking there, but I took myself off the screen.
Oh, I was like, I can't hear him.
Yeah, so. No. I was saying that was it for headlines. We're going to cover a few more of those in upcoming shows. but we should get to our guest here in
a
second. So Matt Potere is the CEO and board member of Sunlight Financial, ticker of the company they are merging with, SPRQ, Spartan Acquisition Core 2. Let's bring Matt on now. Here he is. Matt, good morning / afternoon, whatever time of day it is.
Hey, good morning, Spencer and Chris. Good to see you.
Hi, Matt.
How are we doing today? A lot going on.
Doing really well. Yeah, it certainly is certainly busy, but things are going really well.
Let's talk about the merger and why you chose to go the SPAC route.
Yeah, so we had a lot of options available to us. We're a private company, and we could have raised capital and stayed private with a financial sponsor. We could have done an IPO, and we're cash flow positive and net income positive. So we didn't need to raise capital, but the opportunity to be able to access the capital markets and to be able to do it through a SPAC sponsored by Apollo, Spartan 2, was just a terrific opportunity for us. We sit at the intersection of these two really big trends: renewable energy on one side that's growing incredibly fast, and then point of sale finance and the buy now, pay later trend. And the Apollo team really understands both of those trends very, very well, and are a great value-added partner. So we're thrilled to be partnered with them here.
Awesome. So Matt, I want to dive into the backing on this deal. So you, of course, mentioned that SPAC taking you public, but that pipe, we also got Chamath Palihapitiya, Franklin Templeton, and Neuberger all attached to this. So what does that mean, for the validation of the company and that growth ahead?
Yeah, Chris, we were really pleased with the support and the quality of the investors who believe in our story and are supporting us. What we heard consistently is investors like our simple story. It's easy to understand how we make money. We're in a high growth market, and we've had a tremendous amount of success. And so that's been well received. And again, we're really pleased with the investors who put their faith in us.
Awesome. So SPQR shareholders are going to own 26% of that new company after the merger. I cover a lot of SPACs, and I got to say, 26% is on the higher end that I have seen. So how could that be a positive for shareholders going forward?
Yeah. So again, going back to the quality of investor that believes in Sunlight, I think we think it's validating to what we've built and where we're going, and we think that's broadly good for the investment community. So we're really pleased with the support and very appreciative of it, and excited to finalize the merger and be a public company.
So Sunlight operates with a B2B2C residential solar model, so business to business to a consumer. Can you explain that business model and why it's important for Sunlight and within the solar industry?
Yeah, so let me maybe just a little bit of context for how solar is sold. So for the typical customer, they don't wake up in the morning thinking they want to go solar. A salesperson will knock on their door. They'll introduce themselves and they'll explain how solar works, how the customer can save money, what the system will look like on their roof. And that sale literally happens at the kitchen table. And so our B2B2C model is we're partnered with 1,000+ solar installers and home improvement contractors. And that's the B2B part. And they introduce us to the consumer once the consumer decides they want to go solar or make other home improvements. It's something I've always really loved about this model because we have these relationships, we can access the market, drive significant volume, and we effectively have no marketing cost. So it's a very efficient model for us to scale, both from a capital perspective and from a volume perspective.
So turning back to solar, so one of the trends that we've seen, and it was mentioned, in your presentation, is the cost of solar coming down and electric prices going up. So, what does that mean for growth in the solar industry and a company like Sunlight Financial?
Yeah, there's two really interesting trends that are happening that are helping to drive solar. So first, people go solar today, not just for the environmental benefit. They do it because they like the economic impact. And that's good. That's how we get mass adoption. And so there are these two trends. One, the cost of solar is coming down over time. Soft costs are coming out. The cost for the equipment itself is getting cheaper. And that makes solar less expensive on an absolute basis. The other trend is, historically, the cost of utility power is increasing in the range of 2 to 4% a year. And so that makes solar less expensive on a relative basis. When you put those two things together, you get significant growth in the overall market. And that's what we've seen historically. And we think that's what we'll continue to see going forward, that there'll be good growth because of the sound underlying economics for the consumer.
So for the solar market, one of the things that Chamath mentioned in his one pager with Sunlight was the buy now, pay later concept. So can you kind of explain that and how Sunlight plays a pivotal role in buy now, pay later?
Yeah, so I always describe our business as a point of sale finance business focused on residential solar, and buy now, pay later is effectively that point of sale finance aspect of it. We're allowing customers to go solar. Typical solar system costs $30,000 to $35,000. We're allowing them to go solar with no money down, and because of the economics of the way solar works, they typically save money right away and tens of thousands of dollars over the life of the system. And we're able to do that for them by providing that point of sale financing. So they're not actually going out of pocket to get those savings. So it's part of a much bigger trend, and again, it's really helped to drive significant growth in the industry.
So in your presentation, it mentioned some proprietary technology. So can you explain, how Sunlight has proprietary technology and what that could mean against some competitors in the space?
Yeah, well, I described that point of sale process that's happening with the salesperson and the homeowner literally at their kitchen table. And so after the salesperson has spent an hour with the customer and explained solar to them, the last thing they want is friction when it's time to finance. And so we make it very, very simple for the homeowner to get financing at point of sale. And so we have a proprietary technology platform. We call it Orange. And it's as simple as a homeowner can literally take our app and their driver's license. They snap a picture of their driver's license. It uploads their information. They fill in a couple of other pieces of information, and they go from credit application to full approval in less than 2 minutes. So we make it really, really simple at the kitchen table, take out all of the friction, and it's entirely paperless. So there's never been a fax or an email to process an application in our process. It's entirely through the app, and it's entirely electronic. And that helps the salesperson sell more, and it gives the homeowner a terrific experience through Orange.
Can you talk a little bit about partnerships? So I see, again, 9 of the 10 largest solar installers in the U.S. part of this Sunlight platform. So, who are some of your partners, if you can disclose, and, how important is it to be a leading partner with some of these bigger names?
Yeah, so I can't get into specific names out of respect for confidentiality of our partners. But as you said, we have relationships with 9 of the 10 biggest installers. So if you think about some of the largest public companies who are in the solar space, there's a very, very good chance that we're one of their partners. But we have really good access to the entire market. We have over 1,000 solar improvers and solar installers and home improvement contractors on the platform. And we estimate that our partners generate over 50% of the solar installations in the market. So really good access to the overall market.
Perfect. So the current solar market, only 3% penetrated. So, as Sunlight and other players in this market look to grow, what are some of the targets as far as market share for the solar industry and for Sunlight as a company?
Yeah, it's remarkable. So if you look at the growth in solar, it's been significant growth over the last few years. To put that in context, over the last 10 years, the market has grown 10x. So it's 10 times larger today than it was 10 years ago. So incredible growth. But Chris, you're right. Only 3% penetration of US rooftops. So there's incredible amount of room to run. If you think about, to again, put a little bit more context around that, in California, I believe the penetration rate is in the teens, kind of low double digits. Hawaii, I believe it's higher than that. And same thing if you look overseas. I believe last I checked, Germany was over 20% penetration. So if you think about where we are in the US at 3%, and you think about benchmarks for leading markets, it's significantly higher. And again, just speaks to how big this opportunity is over the coming years.
So in 2019, Sunlight Financial entered the home improvement space. So can you kind of walk us through what the growth is in home improvement and what that means for Sunlight, and also what some of the financial impact of that entry looks like?
Yeah, so we always really saw solar as a type of home improvement, and a specialized type of home improvement. And a couple of years ago, we were talking to our solar installers, who also, many of whom have home improvement divisions, roofing, HVAC, windows, and they were not satisfied with the financing, the point of sale financing options they had. And so they asked us to develop a product for them, and a financing platform, and that's exactly what we did. And so a little bit more than a year ago, we entered that market. It's a huge market. It's a $400 billion market. So it's really large. It's highly fragmented. And we think, again, another opportunity, and it's adjacent to what we do in solar. So it's a very natural extension for us. That said, if we look out over the next few years, we still think solar will make up the overwhelming majority of our volume. But we're bullish about the opportunity in home improvement, and we think it provides really good upside as we continue to build out that market.
So I want to talk again about financials. So one of the things that drew me in is that capital light business model. So just kind of walk us through, and you mentioned the company profitability. So why is that capital light model so important for your company, and what does it mean for financials?
Yeah, so if you think fundamentally what we do, we have two networks of partners. On one hand, we have solar installers and home improvement contractors. On the other hand, we have capital providers who want access to high quality loans with good risk adjusted returns. And we effectively match the two of them in between. And so when a homeowner applies through our platform, through Orange, we underwrite on behalf of our partners, and we originate the loan on behalf of the partner, and then they fund the loan. So those loans don't sit on our balance sheet. It's a very clean, very simple model. We earn a fee up front, and generally we don't have ongoing credit risk. And so again, it's a really simple model. It's very efficient, and because we're not building this balance sheet with ongoing credit risk, it's easy for others to understand how we make money. And it effectively accelerates the cash.
Awesome. So guys, again, we're talking to Matt Potere, the CEO of Sunlight Financial, going public with a SPAC merger, ticker SPRQ. So I want to talk about the new administration we have in the US. So I'll try to break it up into a couple questions here. So what does the new Biden administration mean for the solar market?
Yeah, so here's the really interesting thing about solar. It's bipartisan. And in a world where everything seems to be partisan, it has really good bipartisan support. At the end of December, the solar investment tax credit was extended for 2 years. It's very helpful from a policy standpoint. And that was under the old administration, under the Trump administration, and in a Senate that was controlled by the Republicans. So you can see it's got good bipartisan support. That said, the Biden administration has been very vocal about their support for renewables and to help drive volume and growth in this industry. And there's good reason for that. Solar is a huge producer of jobs. In fact, solar installer is the fastest growing job in the country. And so it gives you some sense for why this is really bipartisan. And so the Biden administration have said that they're supportive. This business doesn't need additional policy support to be successful. Nor do I believe the industry needs it I do believe as we see continued support, we'll see accelerating growth. That's clearly good for our business. It's also good for the economy, and it's good for the American worker. And so we're optimistic about that as well.
So Matt, adding to that with Biden being a supporter of solar, you talked the bipartisan, but I think solar is going to get a lot of attention and focus from that new administration. So did that play any role in deciding to go public now, with the new administration and that positive focus on solar?
So that's helpful, but we actually made our decisions, and when we were thinking about strategic options in the fall. It was before the election, and so I mentioned we don't need policy support for this business to be healthy and to grow, and so we made our decisions to partner and to go down this path with a SPAC and to become a public company, really before we knew that the Biden administration would be in place.
All right, and then one more question from me before we get back to Spencer, and maybe some questions from the chat is, I want to turn back to financials. So I see an estimate of $4.3 billion in funded volume for 2023. Can you just walk us through a little bit of that funded volume and revenue projections, how those play out, and when we may see any revisions to any of those estimates?
Yeah, so I believe you're referring to the presentation on our website, and I encourage people who want to learn more in the audience who wants to learn more about Sunlight to go to the website and get all of the information, and it also includes some of the disclosures about our company. Last year, the second half of 2020, we originated roughly $2 billion in annualized volume. So when you look out over the next couple of years and you look at our volume forecast, it's certainly significant growth. But when you think about what we originated in our run rate coming out of last year, we think it's a reasonable forecast and very much attainable. And so we feel good with the momentum. There's the momentum that we have in our business. There's the overall momentum in the solar market, and both of those will play into our volumes.
A question here from the chat that I want to give you, Matt, and let me just find it right here. There we go. No, I lost it. Oh my gosh. Oh yeah, over 10 years. How much does a panel decrease in effectiveness?
Yeah, so a panel typically degrades less than 1% a year. It varies by the panel and depends on when you bought it, but it does tend to deteriorate a little bit over time each year.
Okay, and then I saw a question earlier. And I wish I knew exactly when in the conversation this question, like what prompted this question. But he asked about, what about solar for people who only have a few more years on their house?
Yeah, so what we offer with solar loans is we allow the customer to own the system on their roof. And there's really two ways in which people go solar. They either rent the system, they lease it, or they do a PPA, or they own it. And if they own it, we provide the loan. And so the nice thing about solar is, if you're toward the end of your mortgage, or even if you're planning on moving, with a loan, you can own the system. It typically increases the value of your home. And so it's adding home value, and you get the benefits of ownership.
And then I don't even know if there's an answer to this one yet, but when do you expect the merger, or maybe we hit that already and I just missed it, but do you know when you expect the merger or when's the vote?
So we'll file with the SEC. We'll file documents with the SEC in the coming weeks, and we would expect the merger to close sometime in the second quarter.
All right. That was a lot of questions. We threw a lot at you, Matt. We appreciate it. Matt Potere, he's a CEO and board member of Sunlight Financial. Again, the ticker of the SPAC they're merging with is SPRQ. Matt, we appreciate the time. Thanks a lot.
Thanks for having me on. Thanks, guys.
Thank you, Matt.
All right. It is 11:40, Chris. We've got some time for tickers. I want to take a breath because I feel like we threw a lot at Matt, and before that we threw a lot at you guys with a lot of different headlines. So let's all just take a second and decompress, and then okay, I feel better now already. All right, let's do some ticker time. Job post tickers in the chat, and let's see what we got. All right, they are already flying in. We'll cover as many as we can. We've definitely talked about a few of these every day. I try not to hit on the same ones every day. So let's see if we can get some variety in here. This is a new one for me. I don't know that one.
Oh, what a ticker. Yeah, so this is Insu Acquisition Corp, their third SPAC. So Insu just closed that deal, as I said at the top of the hour, with Metromile, that pay-per-mile insurance company. So, one of the trends I've been trying to look at is when these deals are announced, when these deals close, does that mean that the additional SPAC is close to completing a deal? So now the attention could turn, to this new SPAC from Insu Acquisition Corp. So it's the third one that company has filed.
HEC, Hudson Exec.
Yeah, so
HEC
is one that I own. So they announced that merger with Talkspace. This is the digital mental health company. So when you look at, telemedicine growing tremendously during the pandemic, looks like it's going to be a force to reckon with post-pandemic. Talkspace is the mental health version of that. They have those partnerships with Michael Phelps and Demi Lovato for advertising and commercials you may have seen. I'm in this one, and I really like the story here because mental health is becoming more of a story from the pandemic, and people need a place to turn to, and maybe they don't feel comfortable going to an office. Maybe they'd rather sit at home on their computer and talk to someone. So Talkspace offers services with licensed psychiatrists. And then they also made an acquisition and got into some of the couples therapy side of things, which is another, large business. So I see big potential for this one. I also see it being, a possible acquisition target again down the road from one of these telemedicine companies to expand their verticals, if they don't want to launch them themselves. So big fan of the Talkspace merger, and I am still holding shares of HEC.
I was on mute there. I'm sorry. I was saying this is going to be interesting because eventually a lot of these companies that go public via SPAC, they're going to get bought out too, right? Like they're going to get swallowed up by larger companies. And
yeah, one of the things with these SPACs, right, is they don't do the IPO roadshow. They don't have that filing, but they're getting so much attention, right, from SPAC sites, from shows like our show, when they do the CNBC interviews, when that deal's complete. So then it draws attention to their business and to their financials. So I definitely think that's a trend a couple years down the road. Yeah, some of these SPAC deals, they're going to get swallowed up again. It's private companies that some people may not even know exist.
I mean, look, it's basically a full-time job to keep up with all the SPACs. I saw a stat today, Chris. I think 42 or 41, one of those numbers, $1 billion has been raised in SPACs this year.
Yeah, this year, and we're barely in.
That's $1 billion a day.
Yep. And there's over 400 SPACs searching for targets now, last I checked.
When they said there was cash on the sidelines, they were not kidding because this money has to come from somewhere. So, all right, I'm sorry. Back to the chat. We're getting distracted here. What about NHIC? I don't know this one. Well, there's a lot. I don't know. New hold.
NAIC? NHIC. Yeah. So this is, I think someone brought this one up yesterday. I feel like this was the one that I didn't know. So I did not do my homework as I said I would.
Okay.
New Hold Investment Corp. That's all I know.
That's what it was.
Jotting it down now.
That's what it was.
We'll cover it tomorrow.
Vidya emailed, and we told him we would have some insights, and we have none. So you have to tune in tomorrow. Sorry. Sorry, Vidya. That's funny. Okay. I'm seeing a few people, or maybe the same person mentioned GIK the same multiple times. So Gig Capital.
GIK Lightning E-Motors is the target here. We had CEO Tim Reeser on the show. This is a, fleet and electrification play. I do own shares of GIK. They're getting closer to that merger vote date. One of the things was when Biden came out and said, hey, let's make the government vehicles all electric. Tim Reeser was out with a tweet saying Lightning E-Motors is the only company, that can fulfill that with, buy American, fully electric vehicles. So, they're out to win contracts with the government. And I think they're going to be a large player in that market.
David Hernandez, Altimmune ALT, not really in our wheelhouse. You'll have to wait for Biotech Buzz at 2:30 for any insights on biotech stocks, but I don't know if Chris and I can say anything intelligent on that. What about SNPW? Andy Nancy. PW.
I don't know if I know SNPW.
Yeah.
I don't think that's a SPAC either.
It's not a SPAC. Okay, then.
No, it looks like a penny stock.
Yeah, 16 cents. Get those penny stocks out of this show. What am I doing?
I don't know anything about that one, but
what am I doing?
It's a penny stock and it's OTC, so it's probably going to run up.
Oh my
who
God.
knows?
I'm so sorry. Okay. HOL, we definitely talked about that one yesterday, if not the day before. Wow.
Yep.
Down.
Play.
They're all sort of coming back down to earth a little bit today. There is a chart. So
yeah, HOL's one, I'd take a look at adding if this thing, dips further. I don't want to be chasing here. I tried to get in at 14. I did not hit my limit on that as it really took off those first 2 days. But end of the day, this is a space play. When Cathie Wood launches that space ETF, I can only imagine this is going to get looked at and possibly added. I own shares of SPCE. I want more exposure to space in my portfolio. So I'm definitely looking at HOL. I just do not want to chase right now.
Seen someone ask if we discussed the ACIC deal. We did. This was what I thought was the news of the day. I am hoping to get the CEO on our show here imminently. But yeah, we've got an Uber for the skies, and so if you missed that discussion, rewind about like a half hour, half hour ago, about 11:10 Eastern time is when we talked about ACIC for like a good 5 minutes, maybe more. So we did discuss this one at length already. Blockchain Brian, he's asking about LEAP.
Yeah, Leap is an interesting one because that's one we mentioned on the show that could be targeting, crypto. So Ribbit is the sponsor. Ribbit is an investor in some of those crypto companies, also an investor in Robinhood. I think this one, is very interesting, but again, no deal announced, and this thing trades over $15. So you're paying a decent sized premium, and as we've seen, some of those ones with high premiums, they drop by the end of day one after announcing. So I think they'd have to land, a really big target here. And I just don't know if that's going to happen at these levels.
Brian Penny says he wants to see a Coinbase SPAC. I don't think that's going to happen for you, Brian.
Coinbase, I was hoping, to get a SPAC deal done as well. It would bring the company public faster. I know everyone wants access to Coinbase right now, with Bitcoin rising, but it looks like they are going to go the traditional IPO or direct listing route.
So bummer for all of us. All right, couple more. What about let me scroll up here. There's a bunch of tickers. Do we talk about BLTS or BLTSU would be the
BLTS. I covered when that was first announced, and I just covered it in an article I did on celebrity SPACs. So Grammy Award winner Sierra is part of the team on this, but I like this SPAC because it's got exposure to some people, within the music and the movie industry, and they're targeting media, entertainment, or sports. So I like the management team. And again, the celebrity gets some of the news, but really look at those management teams. So I do like this one, but again, I think it's still trading as units. So no common shares yet, but still trading under 11. So definitely on my watch list.
General question for you, Chris, here. When you own a bunch of these SPACs, when you buy one, how long do you intend to hold it for? Is this are any, like, do you differentiate? Do you have long-term investments versus SPACs you're buying just for that deal pop?
So it's a mixed bag, right? So I own units of several of these newer SPACs in my IRA. I own some of the SPACs that have announced deals in my IRA. And former SPACs like Virgin Galactic in my IRA.
Mm-hmm.
Some of the ones where I think they're going to get that pop, I'll trade in other accounts. And as I've said before, one of my strategies is rather than selling out completely, I'll sell out part of my position, take profits, and then if I believe in the long-term story of the company, I'll hold on to some shares. So, Hyliion, I did that with SPE, which is merging with ChargePoint this week. I sold part of my position in that, but again, charging infrastructure play. So I want to keep that one. There haven't been too many where I've sold out completely of my position. I do like, holding some shares still, because a lot of these, I think it's the long-term future of the company. So, I bought some Desktop Metal on the dip when that merger vote went through, right? So we talked about how quickly that one fell, ticker DM. So I mentioned that on the show, and I took a position. It took a couple days to break even. And then that thing, really started taking off again. And I did sell out of that position. And, looking at this chart, I kind of wish I would have held it. I actually sold it out of one account and was going to add some in my IRA. And you missed out on my limit order on that one as well.
There's always going to be regret, Chris. There's always going to be regret.
And as I said, you can't own them all. You can't hold them all forever. So it's a very mixed bag. I try to be picky with what I own. So again, I try to focus on the ones between 10 and 11. I try to focus on the ones with good deals. And then, when those deals are announced, I like to dive in. And if I like the deal, I'll keep holding all of them. If I don't, I might sell some if it pops.
Yeah. I was talking to a friend of mine last night, and he asked if we're not talking about SPACs, we're talking about cannabis stocks. But he asked if I had wished I had bought more in these stocks that I'm I've doubled in the last year. And I was like, well, of course you wish you bought more if you're up a lot, right? You always wish you bought more, but you gotta stick to your plan. That's the important thing: is have a plan, stick to it, and then when you stray from that, that's how you screw yourself. So there's always going to be regret if you're down. You're like, why did I buy this piece of crap? And if you're up, it's why didn't I buy more? But you can't do that, otherwise you'll never be happy, ever. You'll never be able to sleep. Just
exactly.
Just some words of wisdom here today. Question from Eddie Edwards: does having access to Benzinga Pro, I assume that's what he's referring to, allow for easy access to these SPACs? If by easy access you mean the ability to very quickly research, then yes. Benzinga Pro is not an investing platform. You can connect it to your trading platform, to your broker, but it's not an investing platform. It is a news and a research platform. So when I'm talking with Chris right now on this show, and you all put a ticker in the chat, and I don't know what the hell that ticker is, I'll search in Pro, and I can figure it out in 2 seconds. Right? Quick list of every headline we've ever done on that ticker and what the company is doing. So that's the Benzinga Pro SPAC ad for the day. You can also sort by M&A headlines and see what are all the SPACs today, right? What are all the SPACs announced today? You can do that. So it's a research tool. It is not a tool to facilitate your trading of SPACs or anything for that matter.
Yeah, and Spencer, I'll add to that. So, Benzinga Pro, great tool, and we're working on growing the SPAC coverage there and some of the tools. So updating the calendar to include, vote date and, important things like that. But yeah, you see all the headlines. You get access to all the articles in one easy spot. Most of those articles are written by me. Also, when we get these halts on SPACs, right? So when Red Ball, halted yesterday, the news desk reaches out to me and says, hey, why is Red Ball halted? What do you see? You're able to get that instant alert there that it's halted, why it's halted, could a deal be coming soon? Are there rumors from Bloomberg or Reuters? Is it just inner rumors? So you see it in one spot. It'll say what the source is. So I like that because, in a day like today, right? So I wake up and there's already been deals announced. I can go to Benzinga Pro and I can see the press releases and the deal announcements, and then I can find that to write my articles and do my research off of. So, Benzinga Pro is great. And, if there's something missing for SPAC coverage, let me know. You can hit me up on Twitter. You can type it in the chat. We're going to grow the SPAC coverage because we want Benzinga Pro to be the best resource for everything, including SPACs.
Right. So just so you know, like this is the Benzinga Pro newsfeed. I have it filtered by M&A. So you can see, like, for example, that Beachbody transaction, that was out at 6 a.m, right? We've got it here, 6 a.m. There it is. So this isn't just SPACs, but this is every M&A transaction that was announced today. You can sort by this and just in literally 30 seconds see, okay, what is every SPAC deal announced today? I'm sure Chris does this. So to answer the question, why is Benzinga Pro so expensive? Let me put it to you this way. You can one trade off of intelligence gleaned from Benzinga Pro can make the whole thing worth it. It can pay for itself with one trade. If you see a headline in our platform, you make a trade off it, you make money, it just paid for itself. So that's what we tell people. It's expensive because I wouldn't even say it's expensive. I guess I think it's pretty fair for the market research marketplace. But yeah, 11:59. Chris, any final thoughts? I'm going to schmooze for a couple, and I'll bring Luke Jacoby on the Benzinga or Zinger Nation Power Hour in a couple of minutes. You have any final thoughts?
No, I think that's it for today, and we do not have an interview lined up for tomorrow. We do have a couple next week. We're working on bringing you more CEO interviews. Hopefully everyone enjoyed the one today from Sunlight Financial. I know I did, and again, I do own shares of SPRQ. That's the SPAC taking Sunlight Financial public. But if there's a company you want us to have on the show, also let me know, or you can reach out to them. We'd love to get more interviews on the show. But that's it for today. Can
I add a quick correction? Benzinga Pro is not yet connected to brokerages. It's something we're working on. So someone also just asked if it was in the Bloomberg terminal. No, this is separate entirely. Again, not a trading platform. It is a research and news platform. Right? Maybe we do a poor job of marketing that if there's some confusion there. All right, coming up on. Thanks a lot, Chris. That's a wrap for Power Hour,
guys. Everyone smash the like. Let's grow those likes before we get to the next show.